Yes, good morning, everyone. Thanks for tuning in to this session. Juki, Ko Leong, right, and Mitra. I think we have a few people that tune in with us together this morning. So time's passed very fast. We are already officially in the month of February, which is the year of water rabbit. Okay. So, and we will talk about the second month of the water rabbit year, what it has in store for me, for us in this March. So, it is actually in the month of March, is a rabbit month. Usually, a rabbit month means that this year is also a yik mao. This time is also a yik mao, a wood rabbit. The whole pillar means that it's a very pure wood energy this year. In the month of spring. That's why it's like a peak of spring that is arriving into 2023. Okay. And today's talk agenda, we start with the introduction, the disclaimer, a brief recap of last month's forecast, and then the influence of 5-element energy in 2023. And also we have BC to talk about the geopolitical financial forecast on the global trends based on his research on what will be in the coming months. And we will sum up the talk for the month of March in 2023. As usual, there's a disclaimer here that the content is purely based on our study in global trend using Chinese astrology and also research that you can use as a guideline in your investment decision. So you need to exercise caution in investment, especially we are in a very volatile situation, and do your own research in the company that you want to invest. And we will not give any stock advice because we are not a financial advisor. Okay, so let's do a little bit of recap on the month February itself that we look at it. Okay, in the month February, we have officially go into the water rabbit year or the Kui Mao year, okay, which is also very prominent in wood energy and fire energy when we study the Li Chun chart for the year 2023. And last month's pillar is Jia Yin, which is wood on top and wood at the bottom. So the whole pillar is also very strong in wood energy. And the hexagram is accomplished that we say that accomplished seems to be a very good hexagram, but unfortunately there's a lot of disasters that is happening also. So when we see the pure wood, Jia Yin is actually a forest, and we put all the Li Chun chart together, we can see fire. So it's wood actually on fire, the image. And also in the accomplished hexagram, once again, is water over fire, which also that stated that it is a like delicate balance, because this is a fire energy, this is a water energy on top, and this is a fire energy at the bottom. And this is a Li Hua, which is a fire. This is a Kan Hua, which is a water. Okay. So what happened in February? What are the headlines? Okay. As I predicted, there is forest fire indeed that I think in South America, in Chile, right? In that region itself, that's happening. Okay. And also another disaster that happened, which is the Ohio train carrying toxic material, which is on fire. And also it has an adverse impact on the environment, especially on the water sources for the people. So it's actually fire water also, the same thing. And you can see that inflation is it is still very prominent. We can see the price of essentials continue to grow in the headlines. So it means that this energy has really impacted the global trend itself.
Yeah, Evelyn, I also would like to add that the toxic that is carried by the Ohio derailment contain dioxins, which is actually carcinogenic. And the latest report I got is that the water from the Ohio's streams and all those is now going towards the main waterways and heading towards Texas. So dioxin is something that is that will take many years, okay, to actually break down. Yeah. So the other thing is that regarding food, Germany yesterday discovered that their food inflation, the price of food has actually gone up by about 20.2%. Yeah. So yeah. So
double digit.
No surprise here. In fact, in Malaysia is almost the same. That you know, the price of a lot of food in Malaysia has also gone up likewise. I think nowadays, you know, the like eggs itself, you know, it's like 65 to 70 cents per egg here, you know. Last time it was closer to about 40 cents, you know. So it's everywhere. Okay, I do not know, maybe those of you from Singapore, do you all share the same kind of food inflation?
Our audience in Singapore, do you have anybody from Singapore that called in today? We have a chat here. Oh, Stanley say yes.
Yeah, so I guess it's universal. Because I think one of the key thing is a lot of the people would like to blame governments and such, but I think the governments also face a lot of issues, in the sense that this is not a one country issue, it's a global phenomenon. So you know, if other countries they want to jack up their export rate, so those that import will also feel the pinch. So it's actually a global phenomenon.
Yes, that's right. Actually, the government, you know, has very little control, because all these are accumulation, the results of accumulation of so many years of, you know, spending and bad decision made that happens here as well. Wow, $4 for the. Oh,
well,
wow.
That's almost 80%.
Oh, that is a lot. Yeah. Okay. And what we can do, we all here, since we are all here together and we have a little bit, I'm sure people that is in this group does have a bit of Chinese astrology. Some are at the expert level, I know of. So what we need to do is that we have to be better. We have to earn more. That's all, in order to manage the situation. We cannot eliminate this. And we cannot have the victim mentality. So what we can do is that, you know, be better. Right on the trend, on the opportunity given. That's all. Okay. So yeah. Next is that in the month of March 2023, what is the energy that we have? Okay, the energy that we have for this month is really a pure wood energy. What I say pure means that the heaven energy is wood. The earthly branch energy, the animal energy is also wood. For Mao, every time we are in the second month of spring, we are always in a pure energy one, more or less pure one, and except for summer and also for winter, because this energy does have one very small sub-chi, but other months is all Mao is also only the wood energy, so it signifies pure growth. And also we know that the wood energy this year to the day master of the year is innovation, is creativity. So we will expect prominent innovation and breakthrough in technology sector. Okay, maybe AI breakthrough or some bots or some intelligent AI bots technology breakthrough, okay, in March. And the market condition is actually still not stable, as we also find in February, although it does not plummet, okay, does not crash. We will not expect to see any crash, I think, within the first 6 months. This is how I look at it. Okay. And it's just that it's not stable. And the resources is significantly lacking. I think we see the drainage of precious metal from all these warehouse, from all this storage, the warehouse storage that every day that PC is reporting. And also, this month also, I see the energy of potential disease outbreak in Southeast, especially could be in the Southeast Asia region. Remember, we talk about the Mother Earth Oracle, which says that there will be also diseases this year still. And the property market will expect to deteriorate further because the wood itself will already control the earth, and we do not have earth, a very, very small earth in this year's chart as well. So this is the outlook of what the 5-element energy in March 2023. Okay, so next. So let's go to the March hexagram, which is approaching the name of the hexagram, and it is arriving. Either way, depends on maybe some they're familiar with the word arriving. Okay, depends on the master itself. So in this month's hexagram is actually earth. There's a lot of earth on top, okay, and also the bottom is actually a lake. It's a toika, means it's a lake. It is approaching actually of spring, and it's time for anticipation and reach out. So we need to grab the opportunity also, as the spring does not last forever. So we also need to beware. After this, it will be I think it's after Yi is a Bing Chen Man. Okay, so after there will be a changes in summertime. That means after April, May is the start of the summer. So we need to beware of the changing in the summertime as well. Okay.
Augustine has a question. What do you mean, okay, by market not stable?
Not stable, not stable. Sorry, I thought wrongly.
Oh, not stable. Means that the condition will be, as in February, is also not very stable, right? It's like we are expecting like up and down, and it is this one. It will not be those that it will not crash. I don't think the time has come for the market to crash it, but it's just that it will be like, up and down. It will not hold. Whenever there is uptrend, maybe it will go down again. So this is what I mean.
I think the other thing is that why it will not be stable could also be explained by a lot of anticipation will go into March that that the Fed will hike 50 basis points. Now, if the Fed decided that because of economic conditions, the Fed decides to hike 25 basis points instead, now that would give fuel to a rally in the stock market. But because of the inflationary pressure, so it's like when the Fed decides not to hike 50 basis points, okay, it hiked 25 basis points, the stock market goes up, and then the inflation data came in, and then inflation data remains hot, and then the stock market will go down again. I think this is the kind of thing. And also to add to that is the uncertainties with regard to the global geopolitical scene, in a sense that I think the Biden admin is working with Ukraine to give them 6 weeks to recapture as many territories as possible back from Russia, and that will mean that if we calculate right now, 6 weeks is from now until then, it will eat into April already. So that means that there's going to be a lot of fighting, more geopolitical tension, and that would actually start to erode confidence in the EU or the NATO and especially US to continue to fund the war in Ukraine. And also during that time, I think there will be more talks on the debt ceiling, okay, because because of the US Treasury movement. The the US Treasury actually have been issuing short-term notes rather than long-term notes. So when you are issuing short-term notes, they need to be refinanced, okay, to continue paying the providing the funding for the government. So what happened is that right now the one-year Treasury bill, okay, has already escalated to very high interest rate. So that means that the borrowing cost for the US government has also increased likewise. So probably by April we would have more data because the quarterly interest payment will be out after the end of March. Then we will have a better idea of how much the US is actually paying, okay, the interest. So all this would result in a loss of confidence, okay, in the US government to continue to support the war in Ukraine. So the other thing that will also go in favor of the market is that the Fed will eventually cave into the US because there is under pressure by the US that it must start reducing the interest rate. It must start to reduce the interest rate so that the US can continue funding the war in Ukraine. So that is why the culmination of all these factors would give the market some hopes, but then it becomes a false hope, and then it goes down, and then there will be some readjustment, and then it goes up again. So it is in that sense, I think it's going to be volatile based on the movement of funding needs of the US government, of the war in Ukraine, and also on the expectation of rate hikes and such. Yeah.
Okay. And actually, maybe the market is also manipulated as well to a certain extent.
Definitely. In fact,
yeah.
I read a report just this morning that the what they call the ESF, emergency. I've forgotten what ESF stands for, but it's actually the plunge protection team. So this ESF was set up during the 1987 stock market crash, where they see that protecting the stock market is important and it's become a national security. Okay, right now in US, anything that turns back, they use national security to solve the problem. Okay, so I can't recall what ESF means, but it is a fund established to rescue the stock market when things are actually pretty down, to give the impression, okay, that things are not so bad after all.
Yeah, I think they will do whatever they can to make things look better.
Fund.
Yeah,
it's called the Exchange Stability Fund.
Okay. Yeah. So I think maybe I will pass over to PC. PC, do you want to share screen? I can stop share.
Yeah. I share mine.
Okay. Yeah.
So just a bit of recap, okay? What happened in February? So during the session in January, I was expecting that February would see a bit of a push up from gold and silver price, but there was heavy short selling by the bullion banks, even though there was a lack of physical stocks in the market. So this suggests that the priority of the bullion bank strategies were to force long positions to liquidate, thus allowing them to cover their shorts. Nevertheless, physical metals continue to lead the COMEX, which we got right. So what happened was, because there's depleted stocks, so I was anticipating that strong buying will actually push the price higher. But I think, due to whatever reasons, initially there were talks that the COMEX was hacked by a group affiliated with Russia. They demanded a ransom, and report was that it was paid. But until today, it's been almost a month. There's still no COT report, commitment of traders report. Now, that commitment of traders report is important because it allows people to position their buying or selling based on the situation at the COMEX. For example, if let's say the bullion banks are heavily shorted, then we know what is their exposure in terms of paper loss. So that would actually allow people who are betting against the bullion banks to actually increase their net long position, so that it creates a pressure on the bullion banks to cover their shorts, and then therefore cause the price to increase. But it seems that for almost a month right now, there's no COT report. So I think it could be done on purpose so that it allows the bullion banks to continue shorting the market without anyone's knowledge of their exposure. So in that sense, they are able to cover their shorts. And this, I think it could be possible that that the Bank of International Settlement has laid down the ground rules for a lot of banks to exit their financial derivatives, and that will include position in gold and silver, because the BIS has already exited its own financial derivatives. Okay, so we don't know yet what's the position until the COT report resumes publication. But that is why sometimes the market is manipulated in such a way that that it favors whoever that is in control, right up to the point when there is no longer any physical in the market. And traders continue to react bearishly to Fed's hawkishness, selling gold and silver to buy USD. Now, this is actually always the case, that when USD is strong, people would sell other things. And this is based on the false premise that the Fed will be successful in fighting inflation. I don't think the Fed will be successful in fighting inflation, because the Fed is changing the goalposts in calculating inflation. They just did it in the month of January so that it reflects a lower inflation. And that is the kind of situation we are confronting in that, some years ago, the West liked to criticize China that its data is not pristine. But even right now, even the data from a lot of countries are less pristine. So our expectation that the debt ceiling will be quickly resolved, thus providing impetus for gold and silver to move higher, did not materialize. Rather, they decide to dilly-dally, simply because I think they do not see the urgency in resolving that. And that is why there is increasing increasing worry, that the US is bordering on the edge of the cliff. And if they fail to come up to a solution, then it could really damage the US reputation. Because right now there is some investors are pricing in a default. So unfortunately, the longer they postpone this, the higher the treasury bond yield is because people, when they are worried that the US could default, then no one wants to hold US treasury. Then they sell into the market, and that could actually cause the yield to spike up. And the higher the yield, the higher the borrowing cost. Okay, and then the higher the US dollar, because people expect that the Federal Reserve would actually hike interest rate in tandem with normally what the 10-year yield shows. So that gives the that gives a market that is very skewed, okay, to one side. So I think because of the higher yield in US Treasury, previously Janet Yellen said that well, we can actually you can continually manage the funds up to June, but that is based on the premise of the then existing yield in US Treasury. But right now the US Treasuries have all risen up, and that means that the June deadline will be moved forward. So the longer they ding dong among themselves, then the higher the Treasury yield will spike. Now there are some not financial advice here. There are some cases where people are observing that if, let's say, it spiked above 5% for the short term, then it is worthwhile to consider a move into the short-term US Treasury, like the 1 year. I think it has spiked up to about 5.27%, somewhere around that region. But if the Fed hike again, then it will actually move up higher. So there are some analysts who are predicting that, for a short-term risk-free, because based on the US record, it has never defaulted, but because of the risk, the yield will continue to move up. Eventually, the US would still print money, okay, and that will cause the price of the bond to go up and then the yield to fall. But because you have already committed, because you have already bought it when the yield is high, so you also stand to profit when the bond price goes up. So this is some of the trades that traders are sharing. Okay, but please do your own due diligence, not promoting anything, yeah? And I myself do not hold any treasury bonds. So WTI crude fell $2.07 per barrel. Okay, as at 23rd February, compared to its price at the start of February, even though it did actually climb to a high of $80.14 per barrel on 10th of February after Russia announced production cut of 500,000 barrels of oil. Subsequently, Biden admin ordered another 26 million barrels of oil to be released from the SPR before putting a cap on the rise. So based on current data, Biden admin has yet to start refilling the SPR. The SPR is the Strategic Petroleum Reserve. You can see that since the war in Ukraine, okay, the SPR stocks have fallen 35.9%. The additional release of 26 million barrels would deplete the stock level to 345 million barrels, the equivalent of a 40.4% decrease since February 2020, so which means it will move down lower. So all the while, the Biden admin has not refilled it. So we were expecting that WTI crude will actually move up in tandem with China reopening, as well as potential of Russia to cut back on its production. So but Biden suddenly say, let's dump another 26 million. So it is, no matter how we see it, at some point in time, how he will still need to refill the SPR. So the more he dump deeper, okay,
we have to be patient.
Yeah. So the more he dumps, yeah, the steeper the curve would fall into lower inventories held. So which means when the refilling starts to go back to the mean, then that would actually push the price of oil very, very high, because suddenly there's an urgent need to do so. Okay, so that is why when it comes to oil, I think that any weakness is still worthwhile to explore if you are into the oil stocks and such, because another analyst that I follow just say that the the oil companies, some of the bigger ones, they are actually having the same cash flow positive cash flow as Microsoft. Okay, one of the companies is Exxon. Okay, and if you look at the price comparison, okay, you will see you will see the difference. Okay, not only that, like Shell, Petro, BP, Chevron, all these are already beating expectations. Okay.
Yeah, PC. Yeah. Another thing is that oil and energy is also quite prominent this year. Remember, this year a lot of fire in the chart. So it's just a matter of time only before the attention is given. And it seems that everything is empty. We have oil that is the reserve has fallen. Gold, silver, precious metal all fallen. It's also in line with period 9. The middle part are all kosong one. That means all empty.
Yeah, so that's why that is that is what I believe Evelyn say when she say that resources are scarce, because everything is being depleted. Okay, so again, if you like to invest in oil stock, do look at the some of the companies mentioned. But if you are interested in even higher dividend stock that is tax-free in Hong Kong, there are a few oil stocks there. The last time I checked, one of them is actually paying a yield of double digit. Okay, so not financial advice, but please do your own due diligence and study some of the oil companies listed in Hong Kong. Okay, because in US there's still a 30% withholding tax. Okay, but if you go to Hong Kong, those oil stocks, they are actually tax-free. So do your homework, check out some of them. Okay, I think there's one in particular is paying double-digit dividend yield, which is better than what some of the Western oil companies are paying currently. Yeah, even those BP and Shell for non-resident holding, there's a 20% withholding tax. So what we got right in not inflated, inflation. Okay, inflation remains elevated. Gold and silver continue to lead the COMEX. As at 17 February, total gold at COMEX warehouse was down 43.9%. Now, versus a month ago, it's already down 2.6% more. And if we look at the silver, total withdrawn from the COMEX was 27.5%, which is 1.3% down versus a month ago. So all this may look at small percentages here. But then when you look at the amount of the bullion held in the warehouses is in millions of ounces, then that is very, very substantial. So again, mass protests and demonstration continue to besiege Europe. Right now in France, they are protesting against the change in the retirement in terms of the retirement benefits. There are pockets of demonstration to protest against the countries involved in funding Ukraine and involved in defending Ukraine, urging the country to leave NATO. So all this, and in UK, there's the civil service is actually on strike continuing. So, and then Russia announced its intention to cut its oil production by 500,000 barrels per day. Japan continues to suppress 10-year yield as predicted. Despite this very action could result in massive inflation in Japan. So there was a period where the 10-year yield actually spiked to 52.5 basis point, and then the Japanese the BOJ then went hysterical and started to buy back everything, to push the yield back down to the 40s. Yeah, so a lot of promises to deliver tanks to Ukraine. But the final figure is insignificant. to turn the tide in Ukraine's favor. So there were a lot of hype, you know, going to send tanks and all those. And then UK, for example, they realized that a lot of the tanks are in a state of disrepair. And in Germany, they realized they've been cheated by the US, okay, to get them to commit a higher amount of tanks, okay. After US, you know, Germany decided not to send, but then US, unless US send, then US say, okay, we are sending our Abrams. Then Germany then say, okay, we'll send our Leopards. But then after that, US say, well, not so soon. We need to do you know, we need to take out the so-called the armor, the special armor from the tank, okay, because it's important. It's a very important technology that we do not want to let the tank fall into Russian hands, and then they get access to the technology. So then, you know, you really wonder then why you want to send a tank that does not have the latest armor technology into the battlefield. Then it will just get hit and then that's it, okay. So but then, you know, this is become very I mean, it boggles the mind why you want to send a tank that is depleted of its important armor, okay, against missiles and anti-tanks missiles, and send a lesser tank, okay, to Ukraine. So again, you know, it will be destroyed very easily. So let's look at the US data. So it is a mixed set of data. CPI was up 5% month-on-month, and PPI up 0.7% month-on-month, rose higher than expected, prompting higher interest rate expectations. Preliminary PMI for manufacturing and services in February at 47.8 and 50.2 respectively. So services have actually gone back up. Below, normally when this kind of surveys, yeah, whether it's the National Home Builders Association, National Association of Home Builders, whether it's PMI or ISM, Philadelphia survey and all this, anything 50 and above is expansion, and anything below is actually contraction. So again, we have retail sales which rose 3% month-on-month in January after falling negative 1.1% in December. Industrial production unchanged in January after a December 0.7% decline. US housing continues to weaken. Existing home sales dropped 37% year-on-year. So NAHB index came in at 42 in February, better than the 35 print in January, slightly improved sentiment due to falling CPI expectations. So normally this kind of survey is they gauge the like PMI, they gauge the purchasing managers' confidence of the economy. NAHB, they gauge the home builders of their confidence in the housing sector. So because there were consecutive months that in November and December that inflation have fallen somewhat from month on month. So that's why, you know, the home builders are back in confidence that inflation could be trending lower, and therefore there's lesser pressure for consumers to buy new homes. So that's why the index was higher. But then what happened was that last week, the Fed readjusted the inflation higher for November and December. So that means, and January it was higher, that means that the coming survey in March could see a much lower confidence, okay? So US housing starts fell 4.5% month-on-month in January, while building permits gained 0.1% month-on-month. Now, there's a lot of questions asked being, you know, why, if economy is doing bad, why there is a 3% increase in retail sales? Well, if you look at it, this chart, which ended in Q4, okay, is already telling you what is trending up, okay? Consumers definitely are taking more credit card debt. Okay, you can see that here in the blue is actually non-housing debt, and here is actually housing debt. So both are actually climbing. So that means that if, let's say, retail sales rose, that it could only mean that January debt has gone up further. Okay, and we can see that at the end of 2022, households have reached a record high debt of 16.9 trillion. Okay, housing constituted 12.26 and non-housing 4.64. Now non-housing debt actually includes revolving credit card debt itself, personal loan, auto loan, and student loans. Okay, so all these are lumped together as non-housing. So retailers offering discounts to clear inventories after massive build-up in Q4. That was one of the reasons why GDP in Q4 rose to 2.7%, because there was a huge inventories built up in Q4 because of expectation of the Black Friday, Christmas sales, and all those. So when those did not materialize very strongly, if you recall, November and December, we have negative retail sales. So that's why in January, they decided to dump all these stocks. Okay, and that was why one departmental store announced, that the sales in January rose 17%. But even though it rose, okay, but because it was due to heavy discounting, the net profit, is nothing to shout about either. So the other reason is that the 8.7% inflation adjustment in Social Security payments. So there's this sudden increase, okay, in the payment of Social Security, and then the consumption of those people receiving Social Security also boost the retail sales. Now, if we look at the continual rise in the debt, household debt, okay, and non-housing debt, how long do you think that the consumer or household can sustain just as interest rates are hiking? Okay, so that's why the consumption-driven economy will start to show sign of distress in the coming months. The higher the interest rate, the greater the burden to service that debt. So this is a chart that shows that consumer credit card, okay, debt has reached 986 billion, and credit card interest is 19%. So if we look at it using 20% as a rough calculation, okay, of 900 billion, that means that they need to pay 180 billion in interest payment a year alone. So if the Fed hike another 50 basis point, definitely it will be, closer to 20% already. And why the consumer are facing such heavy credit card debt? Because they actually are experiencing 21 consecutive months of negative real wages, because real wages growth is still far behind inflation, higher mortgage payments, higher interest payment on debt. And just to show what is in store in the coming months, Walmart and Home Depot weak guidance, okay, they are also Walmart and Home Depot are also forecasting that's going to be weak sales moving forward. So then we look at the housing affordability. This is a chart from Yadani.com. Okay, it shows that this was the time when home affordability fell to its lowest before the global financial crisis, and right now we are hovering around there. Okay, so further rate hikes will drive the affordability lower. Report that Fed may be forced to exit its MBS holdings sooner. For those who are unaware, MBS is actually mortgage-backed securities. For example, banks, they have housing loans, to different type of people with different category of risk. So then eventually they convert this loan into securities, which they sell to the investors. Okay, so then the investors buy it because it gives them exposure, indirect exposure to the real estate market, and then they also earn a dividend from holding that securities. So another factor to watch is the commercial real estate sector. So Brookfield Asset Management and Columbia Property Trust both just defaulted on their debt, amounting to 750 million and 1.7 billion respectively. So the commercial real estate market is showing some weakness because during the COVID, a lot of people were working from home. So then a lot of the office renters decided to lower their office space, okay, cut their office space so that they pay a lower rent overall. Then after the COVID, they realized that there's a lot of savings. So not all of them actually recall the workers back to their office, and some of them might even rotate workers, okay, in and out from, in and out of the office, working from home. So that's why there's less requirement for storage spaces. And if you look at it, a lot of the tech companies are already cutting manpower, cutting employees. So the more employees that are being retrenched, the lesser demand for office space, and that is why the commercial real estate sector is one of those to watch. Okay, so another thing, that I missed just now, when the Fed sells mortgage-backed securities, so what happened is that when you sell these securities, because there's oversupply in the market, the securities will actually fall in price. And if let's say it falls in price, then the yield will actually go up higher. So when the yield go up higher, that means the mortgage rate also have to go up higher. And if let's say the mortgage rate goes up higher, then the affordability level would drop further. Yeah, so hope this help explain. Now the other thing is that lowest mortgage applications. So here we are seeing a mortgage collapse, the lowest level in 28 years. So right now is 2023. If we move back 28 years, that will be 1997. So it is even worse than the peak of the global financial crisis. So what happened is that, if the mortgage rate continue to go up, what happened when the household already burdened by credit card debt, already burdened by auto loan, already burdened by mortgage and facing negative real wages? If they suddenly decide to that it's time to get rid of the property because they cannot sustain the mortgage anymore, and suddenly you have everyone heading to the exit, what will happen to the price? In fact, there's a chart that I see just this morning. I don't have time to include it here, that in some places, some of the home prices have already fallen by double digit. So if it falls another few digit, then there will be suddenly everyone will panic, because they are, those that actually apply for a mortgage that is variable, okay, not fixed, then they will see that their interest payment will continue to rise, and that will actually force them to sell their home. But if the more people sell, okay, then the price will have to fall further, because the affordability level remains pretty low. So that is when we will see, okay, a rush towards the exit, and that housing problem can become a crisis. So that is why I think moving forward, definitely there's going to be chances of a housing crisis remains very high. Then the other thing is that on the rise are actually bankruptcies. So further rate hikes will increase borrowing costs for companies. Many companies rely on availability of credit to operate due to their low or non-existing income streams. You have to know that a lot of the tech companies, okay, especially if you follow Cathy Wood's ARK, innovative ETF and all those, is down about 70 or 80%. So a lot of these are based on companies that investors believe have a very huge potential going into the future. So they rely on continual funding from the market to actually help them achieve that future. So why do these companies actually get so much investors participation? Because it's the way that they market it. Okay, for those who have followed growth-related companies, you will often see that they are forever losing money one. Okay, even though they have revenue, but they always market to the people, telling them, you know, the golden pot at the end of the rainbow.
This one is in line one, yeah.
Yeah.
In line with Period 9 also. Everything they package with beautiful stories, telling to get investor in.
Yeah, so that is why the golden pot is always total addressable market. You know,
kosong one. The company of kosong one.
Yeah, so even before reaching the DM, most of them are already in trouble. And that is why it's not surprising that bankruptcies in 2023 have actually risen up. Okay, so that was in 2009. So this is the bankruptcies per month, per year of the biggest large bankruptcies. Okay, so right now we are 20 something just in January, you know, and the whole of 2009 is more than 30 large bankruptcies.
So expect this will go up some more.
Yeah, so this is the whole year is more than 30, but right now in just January and February is more than 20. So you just need a few more bankruptcies to bridge this. And already there is one of the key things. I think those of you have followed, those of our viewers here, our audience here, who have followed us since the early part, you know, you remember I shared a chart about how to monitor the stress in companies by looking at the IG bond ETF as well as the high yield bond ETF. That is for you to gauge, because the higher the yield means the more distressed a lot of the companies will be in. So eventually, of course, you know, many unicorns are turning into zombies. So especially the Son's stable of unicorns, yeah. During the last during the this SoftBank earnings call conference, he did not even bother to show up. Okay, and they have to write off more billions. So that's why I think bankruptcies will likely worsen, because a lot of it is dependent on continual flow of new shares issues to fund the company, or borrowing from the market to fund the company. So now, previously I've shared charts on the amount of yield that is that has inverted, okay, some months ago, okay, and that when 70% of the yields have inverted, it normally leads to a recession. So Octavio Costa shared a chart which shows that there is 90% yield inversion. Then I also share a leading indicator, the federal indicator, that also shows signs of recession. So we revisit again the US leading indicator. So this was the period, okay, that after it breaches this level, there's a recession. Okay, right now we have already breached it over here. So recession is already here. So what you know, a lot of economists are saying, a lot of you know, people who share on YouTube, on Twitter, hey, do not worry, there's no recession, because they follow the fact narrative that unemployment is the lowest ever. So that unemployment report is a false data, because it follows the U3. How the U3 is calculated is that every part-time job that is created will equal to one employed person. But if you are an if you are a person without job, will you work one part-time job, 4 hours a day, or would you work 2 part-time jobs? So that is why there's a lot of double counting. If you take the U6 data that is out, that remove the part-time jobs, unemployment rate is actually 6.6%. So then again, the unemployment rate in the US is, is adjusted such that if you cannot find work and you're part of the labor force, I think after a certain period of time, you cannot find work, then you are just taken out of the labor force. And to that extent, about 96 to 100 million of Americans of working age are not working. So if we look at it, that the total US population about 360 million, and let's say roughly around 100 million that are not working, that is close to 30% of the population that are not working. Okay, that is unemployed. So that is how they skewered the data. Okay, and the most important thing is that full-time jobs are actually right now stagnant, and full-time jobs are what that will pay the taxes. Okay, so that is why, don't look at the unemployment data as an economic indicator, but you see that the Federal Reserve have used that as an economic indicator, ignoring all those that are fundamentally right in predicting the situation of the economy. So here's another recession indicator. Philly Fed Manufacturing Index. This chart is by Charlie Bilello. Okay, you can see that he has actually outlined whenever it has dropped very severely, okay, it always followed with a recession. He went all the way back to the 1970s. So he put the current benchmark at 24.3. Okay, so all previous recessions, okay, have dropped slightly below this level. So in his contention is that if it dropped a bit more, then definitely, a recession is in already. So there is so many charts that are already indicating we are already in a recession. Only thing is that they try to build the narrative that everything is fine. Okay, so that is why you need to be very careful about the direction of the market, because normally, we are in a transition period of determining whether it's a recession or not based on the narrative, but indicators are already telling us we are already in. So that is why when it's fully built into the stock market that we are in a recession, then we will see that the stock market would actually fall quite drastically. And that is why some analysts, those are that look at the fundamentals, they are saying that based on previous recession periods, they are expecting that the S&P could fall another 25%. So that's why, whatever investment that you do, okay, you need to be a bit more careful. If you want to trade, okay, the volatility actually gives you that ample room to trade. But if let's say once recession is in, it will suddenly fall. So that is why another way is to sit back, okay, and watch everything unfold, and then take the opportunity to start collecting those undervalued shares. Okay. The other thing is that in terms of on a recession, definitely you will see the Fed will save the economy, because if it saves the economy, it will also save the US from defaulting. Because if there's a recession, tax receipts will actually fall drastically. So if tax receipts fall drastically with $30 trillion in loan, how will the US meet the funding gap? Issue more treasuries. So that is why the Fed will eventually have to do QE. But because the Fed is so aggressive right now, when it does QE, it have to do it many times more. Now, just as an example, Between 2008, the QE is about 4 trillion or 3 point something trillion. Okay. Then in the 2020, that crisis, that QE is 8 trillion. Have gone up to 8 trillion. Why? Because the Fed assets have gone from 800 billion to 4 trillion, then after that to about close to 9 trillion. Okay, so you can see that every time that they need to restore confidence in the economy, the Fed have to increase the amount of QE. So because of so much debt in the market, for your knowledge, total US debt currently is about 90 over trillion. Okay, government debt itself is 31 trillion. So total debt of 90 trillion, how much the Federal Reserve actually have to do, okay, to buy back public debt, to give money to the US government to have stimulus to boost the economy. So that is why the next QE will not put the Fed balance sheet closer to 9 trillion, but I think will be closer to 12 to 15 trillion. And that is why, if that occurs, then the commodities market will just blast off, because suddenly everyone would want to own hard assets. And that's why, sometimes when you buy gold and silver, it's not something that you would speculate or trade, but, in preparation for what will happen, okay, in that kind of scenario. Definitely, there's no way to escape recession. Every indicator is pointing towards this. And what is important is that you understand where it will lead to. So between here and there, there'll be a lot of volatility. If you want to trade in the volatility, just do your own due diligence. Look for the technical signals. Okay, I'm not a technical trader, so I don't really do trading in that sense. Yeah. So let's look at Europe. EU CPI was 8.5% higher year on year in January, down from 9.2% in December. UK CPI was 10.1% year on year, down from 10.5% in December. However, with many citizens engaging in protests and demonstrations across the European continent, it is inevitable that inflation will likely remain elevated for a longer period, because no one is working, everyone is demonstrating. Okay, so protests and demonstration affect economic activities. Any event which disrupt economic activities will reduce the flow of goods and services in the economy, resulting in rising prices. And in UK, because of the NHS having strikes, I heard from a YouTube podcast, that the cost of the ambulance to ferry to the hospital have gone up so high because there's not enough ambulances. Okay, so there's also signs of crack in Italy's right-wing government. One party is pro-Russia, while the other is pro-Ukrainian. So even among the government itself, they can't get their they can't get their consensus. Okay, so that's why there's going to be a lot of split. Okay, there's some prediction that Macron may be in France. The French Prime Minister may be forced to leave because of there's non-stop demonstration in France right now. Yeah, but all this is is leading towards a major problem, and that is EU bankruptcies. So as the ECB tightens and cost of doing business in EU heightens, okay, bankruptcies in the EU reach a new 8-year high, driven predominantly by Spain. Now, a lot of this is happening because there's speculation in property markets. So just now I shared with you why US property market is at risk. Spain is already at risk, okay, because Spain has a very good weather. It's a Mediterranean country, so there were a lot of property speculations to own a villa in Spain, okay? So that was why it drove up the property investment. But because the ECB starts to tighten, then a lot of people suddenly realize that they cannot service the loan, okay? And that's why right now there's a lot of bankruptcies, and a lot of the property market players in Spain are in dire straits. Not only that, we have a property bursting in Australia. We have property bursting in Canada, all already seeing double-digit fall in property price. Okay, so as long as the interest rate environment remains very high, this is unavoidable, because a lot of the money that is ever printed over the more than 1 decade since the global financial crisis have all been rolled into speculation, property speculation, stock market speculation, and such. So even cryptocurrency speculation. So because of all this, when people do not really have that money, but then they borrow and speculate, that is why we see a lot of this. Even companies themselves, okay, companies actually borrow money to speculate in assets, and that's why even national banks, the Swiss National Bank, saw 147 billion loss last year because of its speculation in the growth market in the US, and it has already sold most of its shares. Okay, then we have the Norwegian Wealth Fund losing about 150 billion, if I'm not wrong. Okay, because of the speculation in the stock market as well. So that is why when you borrow money to speculate, or you print money to speculate, like what central banks do, it can have a very negative effect if, let's say, the stock market suddenly falls. So the other thing to watch is that the Credit Suisse CDS. Now, this shows that during the height of the financial crisis, the CDS was hovering around, less or more than, we average out over the few years. Okay, it's around 200 basis points, but right now it has reached almost 450 basis points. So that means that the cost of insuring against a default by the Credit Suisse have actually increased. So one thing is that the bank is once again thrust into the limelight after authorities began probing its chairman for hiding the truth from the public. Okay, now what is interesting is that when he was actually raising, he need to raise funds, okay, because there were a lot of withdrawals. So he was instilling confidence in investors. So he was saying that, the outflows have stopped, okay, and right now we are seeing a deceleration, okay, in outflows. So it was revealed that he's not telling the truth. So not only had outflows not stopped, they are now accelerating. So now he's under probe for misguiding investors. And if you look at it, the way that human beings behave never change. Okay, and that is why people often say history never repeats itself, but it often rhymes, because the human character will immediately try to protect against negative forces. Okay, and therefore they come up with things to say, things to do to prevent things from getting worse. Okay, that is why the Swiss Credit Suisse chairman is under probe. Okay, don't need to change this. So a major Credit Suisse crisis could actually pose major threat to other G-SIBs. Now, G-SIBs, for those who are unaware, are globally systematically important banks. Okay, and in Europe, these banks are actually Deutsche Bank, Société Générale, and BNP Paribas. So all these banks, they are interlinked by the bonds that they hold, by the derivatives that they hold. Okay, so the default of one will actually spill over to another. So that is why Europe banking crisis is quite probable if, let's say, Credit Suisse fails. And if, let's say, that happens, then that will actually create a ripple across the entire banking system, and a global financial crisis too is very probable. So that is why I think if you need to even to trade, you do it in small amounts, okay? And if you look at the way that the market behaves, okay, it will always be something that is very gradual, and then it will be suddenly. So timing it is the most difficult thing to do. But if you do it sparingly, at least then your exposure will be less. So let's look at Japan. Now, Japan is another nut case as far as I see it, because there were a couple of times, you know, here it breached above 50 and then it breached against 50 here. So the BOJ just a few days ago issued a statement that it will conduct emergency bond buying to keep the 10-year yield at its 50 BPS target. So, and right now, Japan BOJ owns about 56% of all Japanese government bonds. So that is why, you know, Japan is in a spiral where it has already lost control. So you imagine that every time it spikes up, you need to buy back a lot of your bonds, okay, to suppress the yield, but then you are printing a lot of money. So that's why yen has weakened again. And if let's say yen weakens, then Japan inflation will actually spike up. But they cannot increase interest rate because like I think last month I actually shared total Japan's debt to GDP is 1,600%. So that's why it is going to be a never-ending cycle to keep on printing to suppress until people lost confidence in the yen. And that is when Japan will experience hyperinflation. Because there's no way the government can actually, or the BOJ can actually raise rate. Because if it raise rate, then the government will have no money to pay. Because the government debt is right now hovering around 250% of GDP. So that is why, you know, Japanese financial institution, you know, it's best avoid investing in them because you do not know what will happen, okay? But definitely the yen is in a spiral that I think, you know, the BOJ has lost all control. The only solution is keep on printing money, okay? But it will actually become a vicious cycle because more money printed, weaker yen, higher inflation. Then higher 10-year yield because market is demanding, okay, that you need to give us higher yield, you know, to continue buying your JGBs. So then they print money and buy back, okay, and then it's never ending. So best stay away from the financial institutions in Japan. So let's look at China. Now, China's CPI rose 2.1%, okay, up from 2% in December. So PPI slipped 0.8% in January, down from negative 0.8% in December. So the PPI is in negative. Okay, that means that production cost remains very low. It has not reached an inflationary level. So China reported a current account surplus of $417 billion in 2022, up 32% in 2021. So for those who continually say China is collapsing, China is facing a crisis and so forth, well, the data speaks for itself, okay? So during China's Spring Festival holidays that ended on 27 January, some 308 million domestic trips were made, up 23.1% from the Spring Festival holiday in 2021. Global investors are lining up for RMB-denominated assets. Net overseas capital inflow into shares traded at Shenzhen and Shanghai bourses hit a single month record high of 131 billion renminbi. In January, more than the whole of 2022, Morgan Stanley reiterated its recommendation on investing in Chinese equities. So another thing for your own due diligence, what happened was that not with China reopening, if you look at some of China's toll-paying infrastructure stocks, the dividend yield is very high. So you can look it up, some of some of those companies. Then, according to Bain and Company, personal luxury sales in China shrank negative 10% year-on-year in 2022, ending its 5-year streak of exponential growth. But positive conditions are expected to return before the end of Q1 2023. So again, Chinese are back to splurging on luxury brand. So FDI inflows into China rose 14.5% year-on-year. So despite a lot of naysayers, FDI continue to flow into China. Now, one of the things is that I listened to a podcast which was pretty funny. They say that why France and Italy would not want to go against China is because if, let's say, it goes against China, then LVMH, Prada, and Gucci and all those will actually be, will actually see drastic drop in sales, which actually happened. Okay, now just to share, because of Nike's as well as Adidas biasness towards the Xinjiang cotton, a lot of the Chinese consumers were actually boycotting the brand. Okay, and actually, like recently, you see that Nike and Adidas, they are actually laying off factory workers because there's a lot of inventories that they carry, and they need to actually clear those inventory before they expand their production again. So actually, the Chinese consumer can actually influence the behavior, their behavior towards how a country reacts to biasness towards China. So China continued to see generally stable housing market in January. 36 out of 70 large and medium-sized cities saw month-on-month increase in new home sales prices, up from 15 in December. So that's quite a interesting development. Yeah, a total of 13 cities witnessed higher resale home prices, up from 7 in previous month. So these are the signs that the real estate market in China is stabilizing. So Beijing has 1,048 major artificial intelligence AI companies as of October 2022, accounting for 29% of the national total. So this is assuming it's about 30%. So actually the total amount of AI companies in China is actually 3 times what Beijing has. So that works out roughly to about 3,200 perhaps. Yeah. So Beijing boasts the top industrial agglomeration capacity in China, and that it has a well-developed AI industry chain. In 2023, Beijing will guide enterprises, research institutes, open source communities, and others to collaborate to achieve core AI technology innovation. It also supports top firms in creating ChatGPT style large models to strive for new breakthroughs in the development of AI industry. So again, yesterday, President Xi actually talked about the need, okay, to reach self-sufficiency, and the government will actually contribute funds, okay, to help achieve that sustainability much faster. So let's talk about the rush into AI now. This is a very interesting piece of news in that Nicholas Callan, the Pentagon's first chief software officer who resigned in protest against the slow pace of technological transformation in the US military, said the failure to respond was putting the United States at risk. Now, here's what he told the Financial Times on October 2021. That was 2 years ago. China has won the artificial intelligence battle with the US and is heading towards global dominance because of its technological advances. So you can see that soon after this, throughout 2022, what do we see? Okay, so US have aggressively sanctioned China. But here's what I think, yeah, with regards to the development of AI in China. Now, due to the receptiveness of the population towards technologies, China will lead in big data. You can, if you look at it, if you follow some Twitter feeds about those people who are, in the US, there's always a very conspirational attitude. So whenever government say they want to implement AI or technology, so there's a lot of resistance. So that is why the people actually will shun certain technologies, but they will adapt others. But China, the receptiveness of new technology, people always want to try out. Okay, so because of that, China will lead in big data, and the size of its population further add to this advantage. You have 1 over billion people consuming, doing things with, which actually creates data, and this will add on to the big data. So big data is important for AI to develop learning capabilities. Now, the sanctions will only push China harder to realize its goal, aided by government support. So let's talk about chatbot. Okay, some of the members may have already seen this article. Okay, so yes, tech companies will play up the AI hype to get investors to invest in their respective stocks. And I just want to share a bit on NVIDIA. So NVIDIA has a 60%, 58% drop in net profit, but the stock still went up. Okay, why? Because they say we are 1 million% into AI. Wow, then because of all the hype with GPT, NVIDIA actually saw a rise in its stock price. So can you imagine a company that see profit falling, net profit falling 58%, can still have its share price rise just because they say something related to AI? It's just like during the hype of Bitcoin, any company that has its name with Bitcoin, suddenly have a lot of people speculating. So that is how I would say perverse, okay, the behavior of the investors are, that they see certain thing, and they take it that is what is going to happen. Okay, not forgetting that NVIDIA will not be able to develop expensive cutting edge technology without being able to sell to China. Okay, so they can only, they will be less innovative, okay, because of the burden that is imposed, okay, on their financial on their financial conditions. Because if you want to strive for R&D, you will expect that you spend 3 billion into R&D, you actually get back 10 billion in sales. But if, let's say, right now with your profit already down 60%, how much more can you allocate into the R&D? Okay, and right now you do not have the world's biggest market to sell your products to. So that is going to be very challenging. Okay, and with regards to ChatGPT, it is still at its infancy stage, and at times even worrisome, as highlighted by New York Times reporter experience here. The Bing chatbot goes off the rails. Tell the NYT reporter it will engineer a deadly virus and steal nuclear codes. So it's like Skynet, okay? So in the US, the allocation of resources is focused on AIaaS, Artificial Intelligence as a Service. And this is again how all those growth companies in the late between 2015 to 2020 sell themselves. Okay, first it was the total addressable market, okay, in software as a service, SaaS. Then we have between 2020 and 2022, we have those that are into the cryptocurrencies. Okay, and right now because of the hype, suddenly USA, we should actually look at AIaaS, and always on the service sector. But in China, the allocation of resources is very different because it's focused on AIoT, which is artificial intelligence of things, especially in the manufacturing sector. So that's why China is very confident on its AI-enabled industrial chain, and because that's the rush into AI assisted search and AI as a service. So that's why China lack in AIaaS. Yeah, but I think definitely I think Xiaomi as well as Baidu, they are now looking into it. But I think the most adorable name have to go to Xiaomi, which is called Xiaoai, okay, for their AI. So then let's look at the geopolitics. The US and NATO will ramp up military spending to support Ukraine in their war effort. The defense budget for NATO countries will be raised to a minimum of 2% of GDP. That, when you say minimum of 2%, means it could be much higher. With the world facing a shortage of minerals, additional military spending will be inflationary. And worst of all is that military spending is that the kind of equipment that is seldom recycled. Okay, so and one mineral which will benefit from the increase in military spending is molybdenum, which is an important alloy in military hardware, missiles, and ammunition. This is because molybdenum combined with steel actually makes it more able to withstand high temperature, and that's why it is often used in missile, often used in military hardware, in howitzers, and even in ammunition. So you can imagine ammunition like bullets that actually have molybdenum alloy, and the kind of bomb shells that also have molybdenum alloy, the kind of wastage, okay, because once it's bombed, it's there, it's gone already, okay, the kind of demand, okay, just for ammunition alone, will increase the demand for molybdenum. And you can see that right about the period when there were a lot of whispers that Ukraine was running out of ammunition, the price has started to rise. And then, with current frenzy that they need to supply military hardware and all things to Ukraine, you can see that its price have already shot up. In just 1 year, its price have actually gone up 118%. Okay, so then the other thing is to look out for US to engineer evidence that China is supplying lethal aid to Russia. So this has been circulating for the past 2 weeks. Okay, and normally when US say about something, they will actually create an evidence, like they use washing powder and say that Saddam is actually engineering bioweapon. Okay, so they will actually, you can see that how the US do it in propaganda is that they first try to brainwash the people, telling that China is already doing this, okay, because most important thing is framing the idea into the minds. So when the idea is already in the minds of the people, it's very easy to produce an evidence and say that this, okay, and that is because people want to believe, and generally because a huge portion of the public is biased towards China. Okay, so that is how it's going to be engineered, and I think this is something that you need to look out for, because it will dictate the amount of tension that will actually increase between China and the US. So geopolitical analysts commented that the Biden admin and many EU leaders have become overly committed in their cause and has become personally involved. Now, this makes the evolution of the crisis even more detrimental to the well-being of their countries, because they have reached a point when, it's just like you have become an addictive gambler. You have doubled down on everything. It's just like the roulette. Every time you lose, you double down. Every time you lose, you double down. So when you twice double down, becomes quadruple down. Okay, so they have become so immersed in it that they can no longer, go back to being sane. Okay, to being diplomatic. In their frame of mind right now, they must see Russia destroyed. Okay, there's no two things about it. So when this has become deep, that is when like I mentioned, they have given Zelensky about 6 weeks. If let's say Ukraine started to get a lot of territories being lost, then I worry that they say it's time that NATO move in. Okay, if let's say that happens, then the market would be very, very worse off. But of course, if that happens, then of course precious metals will shine, because suddenly people know the importance of owning precious metals. Okay, because it is the one monetary metal that can actually help a person offset all the pressure of inflation, because war is inflationary. Okay, the disruption in the economy and such. So that is why precious metals are often deemed the ideal safe haven. Yeah. So China and Russia announced that both countries will join forces to decisively defend national interests. Now, this has been misinterpreted by a lot of Western nations that it pertains to military joining of forces. Okay, and that's why Pentagon issue a warning to China. But I think the important takeaway, is this sentence. In the context of the changing international situation, it's important to compare notes in a timely and in-depth manner on the bilateral agenda and the issues of international and regional dimension. Now, this led some geopolitical analysts to highlight China and Russia will synchronize their actions towards achieving an objective. And what objective is that? We do not know. Probably it will lead to a synchronized development, okay, of the BRICS reserve currency, maybe synchronized to do trade away from the US dollar with other countries. Do not know, but it's very, very open, okay? And this itself indicates that both Russia and China actions, okay, from henceforth will be very complementary to each other. Whether it is in geopolitical sense, whether it's in economy or financial, we do not know, okay? But definitely something is being planned, okay? The announcement will likely cross the US red lines, and Pentagon has already issued a warning. China issued new sanctions against Lockheed Martin and Raytheon, okay? Yeah, some of these companies are actually listed in US, but Lockheed will be more affected because Lockheed actually owns the Sikorsky helicopter company, and Sikorsky helicopter company has a large investment in China. And I was told that they have to pay a daily fine, okay, for number of days that totals in the billions, okay. So Sikorsky is actually very vulnerable here. So we should definitely, because their business in China is in the billions as well, so it would actually affect Lockheed Martin for those who are interested in defense contractor shares. Yeah. So Ukraine will be under pressure and lose territories to Russia. Now, the other development is that Iran will likely be the first country to be inducted into BRICS in the coming summit in August. Iran has an arms deal with Russia worth 10 billion to prop up Iranian defenses. Iraq has announced that it will not trade with China. It will now trade. Okay, sorry, typo. It will now trade with China in renminbi, but it will not include oil. So some of the people say, if it does not include oil, does it matter? Well, actually, oil. Iraq and China has already a different agreement with oil, where it is actually barter trade. Iraq gives China oil, China develops Iraq infrastructure. But trade in terms of goods and services, it will be in renminbi. So South Africa in joint Navy exercise with Russia and China, this is already reaffirming, South Africa is very closely knitted within the BRICS concept. So more rejection of the West in Africa, as Chad requested Russia's help in solving its domestic terrorism. Moving forward, we will see more African countries moving closer to Russia and China and reject the US, UK, and EU, including the announcement of doing trade outside of the US dollar. So I see this trend as building up. Okay, heavily indebted emerging market economies could face default as stronger US dollar and higher interest rate wreak havoc on the economy. And I think the likely candidates will be Pakistan and also Egypt. So Evelyn, back to you.
Okay, so I think, yeah, thanks, BC, for the details. Okay, so I think the narrative that you have told us from this month, from the study, I think it slowly unfold, which is in line with 2023's energy, that recession is almost certain, as I said, because the wealth energy is strong, too strong in this year's chart. And we have also other signs that indicating that recession is coming already. It's not a borderline. And moreover, there are also other things that is indicating we have not reached the great layoff yet. There will be, companies are slowly laying off people now. And I think eventually there will be a great layoff this year as well. Looks like it in the energy field. And also in Europe, the things that has happened in Europe, there will be also multiplication. Remember, I say Europe is 9. So multiplication of 9 of the things that it will not stop here. So I think Europe is also another country that will have also a problem. And in line with the influence element this year, which is weak, which signify government is also weak. That's why government are swinging everywhere. They are not certain and they are not strong, or they are unable to control people as well. So all this narrative is definitely, unfolding in front of us. Okay, and also let's go to the page where there's summary page. I think BC, you're sharing screen, right?
Okay, hold on, just typing
yeah.
something. Okay.
Yeah.
This one?
No, the one on summary. I think further down. Okay,
Okay.
yes. So on this one also, yeah, let's summarize for today's talk is that the arrival of springs seems that everyone is still enjoying good times. That means the first half of the year is still okay, and there will be prediction of disease outbreak potentially, especially in Southeast Asia, and innovation breakthrough, to watch out for innovation breakthrough in the technology sector, maybe in the AI, and the property market will deteriorate further. So I think Richard has also a question to ask related to properties in Singapore, right? Maybe this one related, because we say that the energy is always not absolute in the sense. It means that, it's not absolute that 100% the world will be experiencing. There will be some exceptional, maybe in Southeast Asia, the property market will still fare better because it's still strong, it's in the assets, actually the star number 2 is here. So that's why, moreover, Singapore, the currency will be still strong. Okay, so this is why you do not see that much impact in Singapore and it's still going up. Okay. So I think over to you, PC, on your...
Yeah. So, yeah, for the summary, inflation will remain elevated, internal conflict to persist in Europe. I think internal conflict, by this I mean disagreement between European nations, yeah, because right now, there are some talks about Germany. There's a lot of people in Germany right now that is very anti-government. So they think that the government has done a lot of wrong, and they are forcing the government to react. And in France as well. So, but Poland is forever, very eager to enter into the war in Ukraine. So that's why there's going to be a lot of conflict among nations. So there'll be more housing distress in the US. Signs of US recession will intensify. And I think if I base it on the period that because there's a question, when do I think recession will hit? Now, if we base it on the fact that the the fact that the Fed started hiking interest rate rather aggressively, okay, towards the middle of the around late Q1 to Q2 of 2022. It takes about 11 months, 12 months for it to unravel, to really show its impact. So that's why I think very likely by late Q1, okay, which means by April data, which will then be released, March data, we will be released in April, will start show further distress as well. But confirmation would likely happen in Q2.
Okay, the energy patterns that for this year will shows that maybe it will be in after Q2 in the summer months. It will comes in that chances that the recession will comes in at that point of the time. Okay. And also even the war also probably will peak at that time because the fire energy is very strong.
Okay. So then, anything that we will likely see, I think, in the coming 4 to 6 months, definitely then, yeah. So then again, Ukraine is facing multiple headwinds as Russia gains. China and US tension will remain high. New sanctions to be announced by both parties. I think we have reached a point where there's no return with, back to the good old days of relationship between China and US, because I think China has decided that it needs to make a stand now, okay, and start addressing the US as equal and to trade blows with the US with regards to sanctions. So some of you might have read the the post by China's foreign ministry stating that the 10 reasons why China will not be the US. Then it comes up with everything, okay, telling what the US have done wrong in over the last decade or so. So it's already trading blows with the US ideologically and economically. Financially, we haven't seen yet, but likely will happen. I think because last Roth in August, said that in the BRICS summit in August, they will likely announce the BRICS reserve currency. So again, maybe it will match because August is already into late Q2 or Q3 already, start middle of Q3. So perhaps then we will see a greater impact of on the stock market and on the commodity side. Yeah. Then what will happen in August will be, I think, could shift the global could shake the global financial market. If let's say they do announce BRICS reserve currency as last Roth, the foreign minister for Russia, indicate.
Yeah, Q3 is actually the autumn already. In the Chinese astrology. So I think in Q3 definitely the metal energy will come up already. So however, I cannot say that it will have any impact on the price. I would think that in Q3 people will realize that the reserve, the metal reserve is almost empty. It's depleting very fast. I think now people are still happy. They still do not know that.
Yeah, there's a question on what do I think about the price of precious metal in March. Now, there is especially in silver right now, there's a lot of contracts that are outstanding with 3 days to delivery. So definitely the bullion banks would try to short as much, but I think the more that they short, I don't think they are able to cover as much, which I think it will really expose them to certain shift, okay, in price. But because there's a severely lack of physical in the market, a lot of analysts are predicting that after the period, because right now we are entering the period of futures contracts expiration, okay, then there will be, after that, then there could be an uptick in the price of precious metals. But I think it could also be driven by escalating of war. Okay, and I think any indication that NATO would want to get involved in Ukraine will actually spike up the commodity price, whether it is whether there's a recession or no recession, because that itself would actually create will create a shortage in market, because suddenly Russia need to produce weapons, NATO need to produce weapons, okay, and China also need to produce weapons, because you never might know, okay, how the Taiwan Straits would actually whether there's going to be a conflict or not. But China would like to get itself prepared. Okay. So Evelyn, anything for you to add?
I think for the summary, that's it. There are a few questions that we will need to answer in the chat box. So
Yeah.
I think some of it already answered. Maybe that is from Ko Leong Chai says that is there a possibility of recession? We have already answered this, or early Q2, probably expected maybe in Q2. Okay, and then Augustine Lim stating that 50% is roughly how many barrels of oil? So
if we look at it, we base it on the start of the Ukraine war. There is around 580 barrels, a million barrels of oil. So 50%, that would be around 290.
Okay. Yeah.
Okay. So will US continue to strengthen? US dollar continue to strengthen? I think right now all the hype is towards the FOMC lah. So it could be buy on the rumor, sell on the news. And if let's say it is 50 basis point, then it meets market expectation, then I think people will start selling already, because if let's say it's 25, wow, US dollar will plunge even more. But if let's say it's above 50, then it will goes up high. But I don't think it will be above 50. Okay.
Yeah. Even the energy also says that there will be a great reset in the financial system. Maybe this will impact US dollars as a main currency in the world. It looks like it. So I cannot imagine. I've not lived through that time. So I cannot imagine what will it be like. The definition of great reset. I think nobody can really predict that very accurately also. But
I think the great reset will happen maybe forced on the Western nations, because if let's say Russia holds through its promise to announce the BRICS reserve currency in August, then stating that it will be backed by gold, then definitely the US dollar will tank. But I don't think the US dollar will just die like that.
Yes.
It will just fall. Its value will drop a lot, and it will force the Western nations then to whether to announce that they will also back their currency with gold. Okay, that's number one. Second is that if they do not want to do so, they allow the Western currency to fail, and that's when they will implement the CBDC.
I feel that crypto will take place. Definitely. Because this is also in line with the period 9 energy.
Yeah. So if let's say they decide to implement the CBDC, then I think for those who are patient with the mainstream cryptocurrencies, okay, like Bitcoin and Ethereum, then those will actually move, and not the country CBDC, because people would want to avoid it. They will actually want to protest against it. So it also will signal a loss of confidence in the government CBDC. So I think then that is when the cryptocurrencies would actually move, because everyone is waiting for a confirmation that the government-based CBDC would actually restrict freedom, okay, and infringe on privacy.
Okay, yeah. It seems that also the energy is suggesting that Bitcoins, there will be a chance of movement in mid of this year. Okay, there's a chance. I don't say 100%. I cannot predict 100% or so. Okay, so there's one more question here. yeah, it would be good that if now it's quite low, actually it would be good idea to buy some also. Ethereum also is a good idea to buy also. I mean buy and keep. Not buy and speculate because I also do not know how to speculate the market. So Stanley's question is that would the disease outbreak be like COVID? No, I don't think so, because COVID one, we see a lot of water and metal that is related to lungs and all these things. So it definitely, it will not be like COVID type of disease, but it will still be quite a skills. And I suspected from the Mother Earth Oracle, maybe it will be also related to the livestock. Okay.
Okay, so it's going to be a foot and mouth disease or the bird flu lah.
Maybe maybe. Okay.
Okay. So yeah, if there's nothing else, any other questions? Otherwise, we'll close the session. BTC and ETH are risky, just like strike Toto. Actually, it depends on the individual. If you have the appetite for risk, then you can. If you just do not have the appetite for risk, then better don't. Normally, if you have that kind of appetite for risk, you would actually allocate some, but not the entire fortune. But if you do not have it, then place your money somewhere else. Don't whatever you do, you have to do it within your means and also within your risk assessment. Don't go overboard. Okay.
Yes, that's right.
It's not a casino. Like right now, the US and NATO is treating the Ukraine crisis as a casino, keep on doubling down. Okay. So yeah. For those who are not our members, okay, you can still follow us on our YouTube, and members, of course, will get the YouTube within 2 or 3 days, and for those who are non-members, our YouTube would normally release by the first 10 days of the following month. So do subscribe to our YouTube channel to continue supporting us, and thank you very much.
Yeah, for those who are not members, hope that you can join us. We already closed the membership, so hope that you can join us next year. Okay, we have make it very affordable for everyone as well. Yeah.
So thank you very much. Bye bye.
Okay, thanks. Thank you, everyone, for calling in and for tuning in today. Staying with us for these 2 hours as well. I do enjoy your company. Bye bye.
Bye bye.